Your exam is now again rescheduled, and now it is starting from the 26th February. So just check the website too for that notification of release by the IIBF. So let's start the session with some more questions and try to understand the concept behind every question and just maintain the notes as well. Okay, so let's start the session. So the first question that is about the calculation of the compound interest, and here you have to calculate the find the compound interest on 2000 rupees at the rate of the 20% per annum, and it is given for the 18 months and when interest is compounded half yearly. Okay, so whenever we have to just solve the questions of the compound interest, we know the formula, that is A is equal to P multiplied by 1 plus, that is r 1 plus r percent, and it is divided by the n, and it is to the power of the n to the power multiplied by the t. Okay, so where n denotes the number of the times, this n is very important. If I say so, this n denotes the number of the time interest is compounded annually. Okay, so this n just denote the number of the times interest is compounded annually. That means in 1 year, how many times interest is compounding. Fine. So suppose that in the question is that is interest is compounded half yearly. That means in 1 year, the interest is compounding 2 times, isn't it? So just put the value. That means we have to put the value of the n that equals to the 2, because in the question this is mentioned that is interest is compounded half yearly. Suppose that the question is interest is compounded annually. So we know that in 1 year, if the interest is compounded annually, that means in 1 year interest is compounding only one time. But in this question, it is mentioned that the interest is compounding half yearly. That means in the 1 year the interest is compounding 2 times. So we have to write here n is equal to 2. Now after that, we have to put the values in the formula. Okay, so we know that we have to calculate the compound interest, and this A represent the total amount that is equal to the principal plus the interest. Okay, so after that, first we have to just calculate the total amount from the given the formula. So we know that the principal, that is 2000 rupees, and now just put the values here. So rate of interest, that is given 20%. So 20% just write here, and it is divided by the 2 because interest is compounded half yearly, and again it is to the power, that is 2 multiplied by the time period. So time period, that is we considered for the years. Okay, so if the 18 months given, that means it is 1.5 years, because 18 months equal to the 1.5 years. So just write here 1.5, and after that you have to solve this question like this. So this will be 10%, that means 0.1, and this will be to the power 3. After that, when you just solve this 1.1 to the power 3, so this will be equal to 1.331 into 2000 rupees. Okay, so from here you can just calculate 1.331 into, that is multiplied by the 2000, and it will be equal to the 2662 rupees. Okay, so this is the final amount, and this amount is equal to the principal plus interest. So our principal, that is given, that is 2000. So the interest, that would be 662 rupees. So that's how we solve these kind of the questions in the exam. Okay, one more way you can solve this kind of the questions in the exam. Just understand this is a formula base, and again just understand how we can solve in the exam very quickly. So if we know that we have to calculate the compound interest on the value of the 2000, and the rate of interest, that is given 20%, but it is compounded half yearly. So just write here that is 10%. Okay, and we know that in the case of the rate of interest, if the interest is compounding half yearly, that means rate of interest is just divided by the 2, and the time period, that is multiplied by the 2. So time period that is given 1.5 years and it is multiplied by the 2, so that becomes 3 years. So for the first year, if I say, because whenever we have to calculate the interest quotient, okay, so we know that we have to calculate here interest on interest. What we understand by the compound interest is known for the interest on interest. So for the first year, the interest will be applied, that is 10%. Okay, another year this 10% will be applied, as well as 10% of the 10%. Okay, look here, we only solving the interest. Here we only solving for the interest. So for the first year, suppose that 10% rate of interest applies on any principal. Okay, okay, and for the second year this 10% will be applicable, and 10% on this 10%, so that will be equal to the 1%. Fine. For the third year this 10% will be same. Okay, and now this 10% plus 1% will be same. Okay, now again 10% will apply on this 10%, so that will be equal to 1%. And again 10% will apply on this 1%, so that will be equal to what? So that will be equal to 0.1%. Okay, now just add all these percentages, so you will get 10 10 10, that will be 30, this 1 that will be 33, and the total that interest that will be applicable, that is 33.1%. And we know that the principal amount that is given 2000, so just multiply by this and you will get the interest. So 33.1 and it is a percent, so just write like this, and you will get the answer, that is 662 rupees. Okay, so this is how we solve. You have to just practice the questions by this way. After that you will just understand it very easily. So the compound interest, that is known as the interest on the interest, and we have to, either you can solve by the formula or you can solve by this trick. Okay. Now the next question, that is related to bank reconciliation statement, and here you have to just find out the balance as per the passbook. So whenever the credit balance is given, okay, so you have to understand, you have to just consider this figure as a negative. Okay, so here that is cash book balance is given. So cash book balance if the given, so the way I am always explaining you, you always have to write by this way. The first step, that is you have to write here passbook, and like this the second step, that is cash book and the passbook. Okay, fine. After that, the balance that is given under the cash book, that is given 13,000. So just write as a negative figure. So that will be equal to the minus 13,000. All right. After that, if the bank interest that will be applicable on the overdraft appeared only in the passbook, that means whatever you have the loan in the bank account, so bank charge the interest on the OD. So if the bank charge interest on the OD, that means the bank will deduct 2,600 rupees in your bank statement. Okay, but you are not aware of that. That means in your cash book this transaction will reflecting as a zero. Okay, so what we have to do, the first step, that we have to write, if here it is giving cash book, we have to write here passbook. The second step, we have to make table like this, and the third step, we have to just circle this and this. Why? Because here the passbook is given, so just circle passbook here. Suppose that in the question it is given like credit balance as per the bank column of the passbook, so we have to write here cash book and circle the cash book here. Okay, but here we write the passbook, so that's why we circle the passbook here. So why we circle, just understand this. We have to just now put the value respect of the what the we circled, like we circled here passbook here. So we know that now what we have to write here, so we have to just consider passbook balance is greater than cash book, or say passbook balance is lower than the cash book. So in the first condition, the passbook balance is lower than the cash book. So if the passbook balance is lower than the cash book, So if it is lower, so just put the value here with the negative term. Okay, suppose that passbook balance. Suppose that this passbook balance is more than the cash book balance. Suppose that here it is written plus 2600 plus 2600 rupees. So here we just put the value with a positive figure. Okay, but in this question the minus 2600 for the first condition, the minus 2600 here it is given, and for our cash book this balance is a zero. So that means in this first condition passbook balance is lesser than the cash book, so just write the negative figure here, and by what value? That is a minus 2600 rupees. Now the second condition, that is given ki check deposited but not collected by the bank. So suppose that we just, or say I just deposited, I as a customer, okay, I as a customer just deposited a check into the bank, but bank is still not collected the check. Okay, so that means this transaction will be appear in my cash book with a plus 5000 rupees, but bank statement, in the bank statement it is reflecting as a zero because bank is still not collected that check. But because we deposited the check and immediately we entered the amount in our cash book, so that's why for this statement the cash book balance will be 5000 and our passbook balance will be the zero. So for this second transaction, now we also look for the passbook balance is greater than or the more than the cash book. So the answer, that is passbook balance is still lesser than the cash book. So if it is lower than or say lesser than, so just again write here with the negative figure, and by what amount? That is 5000. So just write here 5000 and just solve this and you will get the answer. Okay, I hope it is clear for the everyone. So the answer, that will be 20,600. Okay, so that would be your answer here. Fine. So this is how we solve these kind of the questions in the exam. So you always have to, whenever you have to solve the bank reconciliation statement, you always have to just follow the 3 steps. That is, if the cash book balance is given, so just write here passbook. And after the second step, just make the table cash book and passbook. And third thing, that is just encircle whatever you have right here, just encircle here. Okay, so now just attend the another question. So after allotment of the shares by a company, when the allotment money is made due and it is debited to which of the following account? So whenever the any company, whenever any company issues an IPO, or say whenever a company just issuing first time in a general public issuing the shares, and generally the company invites through the application. Okay, so there are basically the step, that is the application. So if the company is demanding, if the company, suppose that any company's the face value of the share, that is a 10 rupees. Okay, and this is a company share that is of the 10 rupees. Okay, the face value of the share, that is 10 rupees, and just company want this rupees from the general public, want this share rupees from the general public just in the installment. Okay, so if I say that is the first installment, that is known as the application. Suppose it in the second installment, that is allotment, and after allotment every installment is known as a call. So application, allotment, and after that first call, and suppose that in the company just demanding in the next call, that is second call. Okay, so suppose that it is not necessary for every company. Okay, I'm just taking an example for a company issuing a share. So first time, just company receiving the money through the application. Okay, so suppose that company want that in the application stays 2 rupees, in allotment stays 3 rupees, in first call 2 rupees, and in the second call again 3 rupees. Okay, so that will be equal to what? That will be equal to the 10 rupees total. So company want this share price in the installments. Okay, and after allotment every installment, that is known as a call. So this is first call, this is second call. Okay, Suppose that another installment company want, that is third call. So that depends. This is just an example. So like in the application stage, suppose that company first time receive the application, receive the money from the application amount, so that will be known as a shared application amount. In the second stage, that is share allotment account. Okay, third, share first call account. Okay, either it is all the part of the, it is the all the, when we just try to understand how we make the debit and credit transactions for issuing the shares of any company, then we will better understand this. Okay, so now understand only this, that is all are the part of the share capital account. Like share capital account, like that is share capital account consists the share application amount, that is, 1 minute, that is our share capital account, and that consists what, that consists share application amount, share allotment account. Okay, and if another installment there, so the first call share first call account, share second call account, so that all are the part of the share capital account. Okay, so if after allotment of shares, suppose that through application just company received the money, and after that company just accepted some applications and rejected some applications, and that applications just, or say the member, or say the shareholders become in the allotment stage. So after allotment of the shares by a company, when the allotment money is made due, it is debited to which of the following account? So the answer that will be, it will be debited to the share allotment account. So that would be the answer. Okay, so the answer that would be called the share allotment account. We further just understand all these through the debit and credit entry of the transactions. Okay, so now understand only, I think now it is understandable for everyone, the theoretical part of this question. Okay, now understand another question that is related to a balance sheet equation, how we just make the balance sheet equation. So whenever any person that started with the business, suppose that through the entity concept, if I say, that is entity concept of accounting, that says that and owner and its company, both are different entity, both are different entity. That means, suppose that I am the owner of any particular company A, and I am the owner of this particular company A, and so in the accounting, or say from the accounting perspective, me and my company both are different entity. Okay, so suppose that I started a business with a cash of 80,000 rupees. Okay, so I started the business with the cash of the 80,000 rupees. That means, balance sheet equation, what we understand by the balance sheet equation, that is assets equal to the capital plus liabilities. Okay, so sometimes we say that is a capital and this is a liability. So for company point of view, that is a capital, and for on owner point of view, that is a cash. So cash always comes under the asset side, cash always comes under the capital asset side, and capital this. So for the first transactions, if I say that A started a business with the 80,000 rupees, that means this is cash for the, this is cash for the me. Suppose that I am the A. Okay, so this is a cash for me and capital for my company. So how we can write this, that is 80,000 and 80,000. Okay, after that the second step, that is then purchase goods from B on credit for 21,000 rupees. So if I am purchasing the goods from B on a credit of the 21,000 rupees, that means this would be my liability to pay. This rupees would be my liability to pay. Okay, so if I have to write the second transactions, how we can write that? Look, this 80,000 rupees, this will be here, and if I just purchase the goods of 21,000 rupees, so that goods value of the 21,000 rupees also a part of my asset, isn't it? Because it is a part of my stock. If I purchase any goods from the B, just understand this. Suppose that this is A and this is B, and A purchased the goods on credit, okay, on credit for 21,000 rupees. That means this 21,000 rupees is liability, okay. And if I purchase a goods of the 21,000 rupees, that is also a part of the stock, and stock or say inventory, okay, and the stock or inventory is also a part of the assets, okay. So if we have to just write the balance sheet equation here, so how we can write, first transactions we write like assets, that is equal to the capital plus liabilities, and assets that are that is a cash. A started a business with the cash, so the for the first transactions capital also the 80,000 rupees. So what the cash for me, it is a capital for the company, because company have to pay for me, okay. So that's why it is on the right side of the balance sheet equation. The second step, that I also purchase a goods of the 80,000 rupees, that is a part of the asset. So I can also write it as 80,000 plus 21,000, and this is also our liability to pay. So this is how we can write, okay. So if I say the total asset, because capital and liabilities both are different, okay, but the total assets, the value of the total asset, that would be equal to the 1 lakh 1,000 rupees, isn't it? Just solve this and you will get. So 1 lakh 1,000 rupees here, and our liabilities, that is 21,000 rupees, plus our capital, that is 80,000 rupees. So the now you can just find the answer here. So the answer that would be equal to the this, that is 1 lakh 1,000 rupees, that is equal to the 21,000 rupees plus 80,000 rupees. I think now it is understandable for everyone, isn't it? Okay. So that's all for this session. I hope this lecture would be very useful for you. And if you are liking our effort, please do not forget to hit the like button on this video. And if you are not downloaded the Adda 247 application, just download this and subscribe the Officers Adda 247 YouTube channel, so that you can get the notifications of the live lectures as well as the notifications of the important news that is related to your exam. Okay, so thanks for joining me here, thanks for watching me here, and like this video and share this video to your friends.